Hey traders, a quick heads up here on net gas, gold, silver and crude oil, starting with natural gas. So what's happening right here on net gas? As mentioned yesterday, we had a green candle, a very aggressive way to enter double bottoms. It was a minor double bottom which did not play out. We had a little and minor bounce from here, but the price wants to continue to push lower, as now we had broken below this low, means we have a possible trend continuation towards the downside. As you can see, this level was a level of significance right here that was acted as support and resistance. Now if broken below with momentum, we can get a possible push lower, and the zone above will now act as a level of resistance. Now I won't be interested in taking long trades at this point, as now the support is broken. So let's see what I've said in my last video so that we can understand conditions and entries. Now, only thing that will invalidate double bottom pattern, that will be if the price or a candle goes below and closed below as well. So as you can see, we had a wick that has gone below right here from this rejection box, which is totally fine. But if you have a candle that closed below this box, in that case, we have a signal that price wants to continue to make a new lower low and continue to push low in a trend. If that happens, what I will look for 1 and 2 red candles, a good momentum below, and then I'll start to look for my reversal bearish trades only. Right, so we had a green candle. That would be a stop loss hit if you have your stop loss below. I had my stop loss below this box, and that is where I exit my trades, as now we have a likely signal that price has now made a new low and we can have a possible push down. So at this point, I'll use my Fibonacci tool to calculate a possible pullback right here from low to the zone right up there, and now the 50% retracement will be my possible pullback to take aggressive entry if I want to enter in an aggressive way with a sell limit order to take my continuation trades. But for the less aggressive trader, if you want to see an extra confluence from the price, all I want to see a few candles of green candles of a pullback, which is likely now, and then I'm expecting a possible bearish engulfing pattern. Looking at a new low, we can get a possible pullback and then another low, and price can likely push lower from here. So not taking any buy trades as long as we are now below the zone, which is broken, as long as we are below 50 EMA. That is why I'm only interested in taking short trades, but with conditions only. The next support is right down here, which is quite lower. So for now, I'm just looking for my pullback entries with a pullback bearish engulfer and keep on taking shorts. Again, if you are in this trade, I've taken my loss and now I'm out of this trade as bottom has been broken. My stop loss was here. Again, I'm not in the trade, and the zone which is broken, in case you are brand new on this channel, the zone that has been broken is right here. Little bit of adjustment, which is 2.732 goes up to 2.796. Now I will use this zone as my trend continuation zone to take my bearish trade if I get a bearish engulfing candle in this area of value. Here on capital.com, right here, the zone that has been broken is 3.004 goes to 3.092. Now the zone, once this candle is closed, I will use this zone as my trend continuation zone. If you are trading on this platform, then I will use this zone as my bearish zone, take my sell trade, or with a pullback of few candles followed by bearish candle, and keep on taking shots until we get to the next level of support, which I'm going to mention in my upcoming videos. Here on NEMEX, the zone which is right here, 2.853 goes to 2.965. Once the zone is broken, only then if I'm trading on this platform, I will use this zone as my trend continuation zone. Bearish for now, I will still look for the pullback entries below 50 EMA, bearish engulfer with few green candles. Only then I'll take my sell trades. For now, I'm just looking for sell opportunities, not taking any trades as long as I see any sort of signal. Here on gold, if you remember, I've shown you a ratio yesterday that we can get a possible push lower. As you can see with this bearish engulfer, we had a pullback here on silver to the upside and on gold to the upside. So ratio is working perfectly fine as mentioned yesterday. Now we have a double top pattern here on ratio, means we can get a possible fall out of ratio at least till this low, and here on gold and silver we can get a possible push up looking at the gold and silver ratio trading. But here we do not have any sort of condition for gold. We can get a general push up looking at the ratio. Like I mentioned yesterday, without condition I do not enter my trade, but generally we can get a possible push up at trend continuation, as now we are about to make a new high. Still not, but once the price make a new high, only then I'll start to look for my pullback entry, bullish engulfer, keep on taking longs till I get to the level above in red, which is a very good level, a major level, which is 2035.25, that goes up to 2053.59, from where I'll be looking to enter my sell trade with bearish engulfers or double top condition, inverted hammers, 382 candles. All these are my entry condition here for gold. Silver is also about to get to the level of resistance, which is right up there, which is 24.26 goes to 24.73, from where I'll be looking to enter my sell trade with conditions like bearish engulfers or double top condition. It is not a major zone, but a good level from where we can expect a pullback and then a push up. So for now, I'm looking for a condition at this level. Once I have that, I'm going to take my sell trades. So the last one, we have crude oil. Now it's pushing up, and as you can see, the price push up, broke above 50 EMA. We had a pullback. It is a bullish engulfer, but it is not one of my entry condition. It invalidates one of my rule. So that is why I'm not entering this trade, but in general, we can get a push up out of crude oil. Also looking at a possible inverted head and shoulder pattern, which is a bullish pattern. Now price is in a process of creating a head. Once the price hit the termination zone, we have a completion of head right here. I want to see a rejection, and then I want to see another push down after the rejection to my termination zone below. Once that happens, we'll have a completion of left shoulder, the head, and then we can get a possible right shoulder. With that, I want to see a condition within this area, within this termination zone. Once I see that, these are the conditions I'll be closely looking at for my head and shoulder pattern. So that is why it is very important for your next buy trade. I want to see a break above this high to see a confirmation that price wants to hit the level above. So that is why I'll be looking closely at this termination zone, and I'll look for the rejection. If we have a rejection in this termination zone, we can get a possible head and shoulder pattern as well. So keep an eye here for this condition as well. And if the price gets to the level above, which is 82.11 goes to 84.05, from there I'll be looking to enter my reversal trade with bearish engulfer or my double top entry condition. So that's it for commodities, guys. Any questions, any confusions, you can always DM me on Instagram. I'll get back to you ASAP. Hope you trade green rest of the week. See you guys in the next video. Till then, take care.